Good afternoon, everyone. Thank you so much to Dew Street Asia for gathering the group of us here today to share on a very interesting topic. I'm Rebekah. I'm a managing director at Fosun Group, and I sit in Singapore. I'm very glad to have the honor of moderating such a distinguished group of panelists today. And I know we overran a little bit from the previous session, so without much further ado, I'll let each of the panelists introduce themselves, the firms that they're with, as well as their key focus areas. In customarily, I will just let ladies go first. So Subun, over to you.
Thank you, Rebecca. So I'm called Subun Ko. I'm the founding managing partner of iGlobe Partners. It's a cross-border VC fund. My background is I came from DBS Bank. I spent time in the Treasury, Credit and International Department of DBS. And in the late 80s, I went to Silicon Valley and I started a corporate VC fund called Vertex. So I ran the American operation and European operation. I started iGlobe 21 years ago. December this year will be our 21st anniversary. So I ran a cross-border VC fund. 50% of investments are in US and Europe, 50% in Japan and ASEAN. Our team is multicultural, multidiscipline. One fund just go help entrepreneurs to do cross-border their national boundaries. Three industry sectors we are focused in. One is smart city, fintech, and synthetic biology. Yeah, thank you.
Wonderful. Thank you, Subun. Over to you, Donald.
Rebecca, thank you. And thanks to Deal Street Asia for hosting all of us. We're looking forward to the panel. My name is Don Lacey. I am the Chief Operating Officer and a Managing Director at an investment vehicle that Ping An Group of China set up about 4 years ago. That vehicle is called Ping An Global Voyager. And what we are is a growth stage venture investor. So we are not in the business of writing $500,000 checks into the seed stage of a company. We are in the business of writing $25 million checks into the Series C round of companies that are at a point of more commercial traction. We focus on fintech and health tech and businesses that are related to those. We've got a broad definition of what constitutes both fintech and health tech. And we invest globally. So most of our investments to date have taken place in North America or Western Europe. We do have investments in China and India, and we have a focus on Southeast Asia as well.
Okay, thank you, Rebecca. Hi, everyone. I'm Wallace from China Taihecap. Maybe I'm a new face here because this is the first time I'm joining this session. And I'm the founding partner of this company, and our firm starts in 2012. Initially, we help our clients in China, in mainland China, raising funds from all over the world. So we are primary market financial advisor. And we just got started in Southeast Asia in last year. And we're trying to act globally, but Southeast Asia is the most important area for us. And back in China, we helped over, for the past 3 years, we helped over 100 clients in their, after Series B, in their growth stage to pre-IPO rounds, raising more than 15 billion US dollars exclusively. Those areas include e-commerce, like Pinduoduo was our client, and the largest used car platform, Guanzi.com, and the EV company Li Auto just got listed this year, and the largest transportation and logistic platform called Food Truck Alliance, who just raised 1.7 billion US dollars from all kinds of investors. So in Southeast Asia, we're looking at venture and the PE deals, try to help our clients understand the business models from China, try to help our clients learn something from China, and try to help them raise money globally. So this is more like a global mandate. And the key areas we are focusing on is like e-commerce, like education, healthcare, and fintech and logistics. So this is all about us. Thank you.
Thank you, Wallace. So I think, as you mentioned, this is your foray into Southeast Asia, so
Uh-huh.
which is also very perfect for timing in terms of this topic. So jumping right into the topic for today's panel, and we'd love for each of the panelists to share, perhaps because we all know that Southeast Asia is actually a very diverse region. It's made up of many different countries with actually many different languages and cultures, and navigating that, and the different rates of growth and opportunity. So perhaps, it's just starting from a macro point of view. For each of the panelists to share which are the countries that they are. Given that we're doing this virtually, I'll just again go back to that same sequence. So back to Subun.
Thank you. So maybe I'll just give macro level numbers. Here, when we talk about Southeast Asia, there are essentially 11 countries. It has a population size of 680 million in aggregate, so the market is actually very big. As what Rebekah just said, each country has its own law, so it's really not so easy to penetrate. I think the good news about being in Singapore is that because of the law, regulations and all that, many of the new startup companies, even they start in Indonesia, they all have their holding company in Singapore. And clearly, this is something that the central bank encouraged. And over the last, I would say, 5 years, we have seen a lot of even Vietnamese company, you can invest in Vietnam, and yet there's always a link to Singapore. And Singapore government has been very good in cutting out all these special bilateral relationships. So we really welcome a lot of global investors to come to Singapore and share the experience. What I mentioned is that because traditionally Singapore is part of Malaysia, so we kind of treat Singapore and Malaysia kind of the same, similar. And although Singapore only has 5.8 million population, the economy is much smaller. But in terms of welcoming more immigration of foreign talent on tech, we are actually well ahead of other countries, which is a bit more protective of people coming in. Although there's still free flow of money and free flow of talent moving in and out. So traditionally, Indonesian businesses, conglomerate, they have already set up Singapore presence, and also many of their wealth has been here, and many of the bankers have been servicing the Indonesian and the Malaysia businesses for historical reasons. So we are most familiar with that, and obviously our high-tech company are following the business linkages over there. I would say two countries who are big and emerging, which is two new emerging countries, would be Vietnam and Myanmar, because of their popular size. Philippines is a bit further away. It has a lot of potential as well. So these are generally for area of interest for iGlobe. We are interested in that as well.
Okay, thank you, Subun. I think she really gave more color and insight into perhaps some of the, more established regions like Philippines, but also going to the newer areas, right, like Myanmar. How about your side, Donald? What is the Voyager team thinking about in terms of a country exposure in Southeast Asia?
Thanks, Rebekah. I think Subun frames it very well. On the one hand, you can sit in New York, as many years ago I once did, and kind of read reports and get very excited about this kind of mythical land called Southeast Asia, and you get very excited about the population and the economic growth, and you think, man, we gotta do stuff in this mythical country called Southeast Asia. And then you show up in Southeast Asia, and it becomes very apparent that there's really no such place as Southeast Asia. There's a collection of just exceptionally different countries at very, very differing stages of development, many religious differences, many cultural differences, many linguistic differences. And you have to pick your battles, you have to pick your choices. And one thing that we will do from time to time is exactly as Subun said, we will look at businesses that maybe nominally situated in Singapore for various, legal and, reasons of logistical convenience, but have meaningful focuses elsewhere in the region. I guess that it's true in our own particular ambit. It's oftentimes true that payments companies that have a regional focus will be headquartered in Singapore. That's an area of interest to us. One of the other things that we do is we look for ecosystem businesses that have parallels to the different ecosystem businesses that Ping An has built within China. So Wallace knows very well, we have a big business in China called Ping An Good Doctor, and we have another, which is a big telemedicine platform. We have another big business in China called Auto Home, which is China's largest online used car portal. And these ecosystem businesses, very relevant to fintech and health tech, and they have the needs that they serve are not at all unique to China. The same sort of human needs that give rise to the need for an online used car portal or an online telemedicine portal. Those are the same needs that a family in Indonesia might have or a family in Malaysia might have. So we tend to look for markets within Southeast Asia that are at a point of adequate scale and economic development, for it to be worth our while to spend the dollars and spend the intellectual capital to work with our portfolio companies to expand there. Most of the time for us, that tends to mean that we emphasize Indonesia a little bit more than other markets in Southeast Asia, but not exclusively so.
Interesting. So what about Wallace? I mean, I think both Boon and Donald talk about using Singapore as a hub, and clearly your firm has also, chosen to use Singapore as a hub. We also read the news about many big Chinese giants. The latest is ByteDance has made Singapore hub. Where are you looking at from Singapore, and why?
Yeah, actually, because we're dealing with different VCs and PE funds, almost every day. What we see is very interesting that a lot of funds are looking at different areas to seek for different business models or different sectors. Like for a large population areas, maybe a lot of funds are looking for like large platforms or ecosystems. The giants like the Next, Grab, or Gojek, something like that. So it's a great storytelling thing about a huge population, enhancing their growth, right? So this is one thing. We see a trend of a lot of VCs, PEs betting on the next unicorns or something bigger than that. And the other thing is that we see a lot of like enterprise service companies getting funds, and those companies originated more from like Singapore or even Thailand or Vietnam. I think that's because the per capita GDP is higher for these areas, and maybe education, the atmosphere of education is quite friendly for some of for most of the people, and they have talents to support this kind of like startups. So this is maybe another angle, on top of other on top of like Donald's ideas. And what we see is that a lot of Chinese strategic investors like Tencent, ByteDance are trying to build up offices here. And actually, what they are looking at is something with big population to try to find out some new areas or new markets for them to enter. I think this is another thing. And for the PE funds, I think for late stage funds, most of them are still looking at the numbers, for which areas have the great potential for monetization. I think that's why a lot of PE funds are focusing on like areas in Singapore or Malaysia or Thailand. So yeah, that's what I think.
Thanks, Wallace. In fact, you also made a few good points, which is some of the sectors of interest. Donald talked a little bit about his sector focus,
right.
But maybe I go back over to Boon first, because she does a lot of cross-border deals, including with the US. So Boon, given this geographical landscape, which are the sectors that are most of interest, perhaps to you and your firm, and why?
Okay, I think for Southeast Asia, clearly there are two sectors are particularly interesting. One is since we are also headquartered in Singapore, and Singapore obviously is a city and is also a country, so that's a good thing. So I feel that there are some things that we can learn from the efficiency of running a smart city, and if we are successful helping startup companies to define that, we can actually hop to other cities to duplicate the whole thing, or maybe we can do some modification. So one of the company, maybe I just explain, will be a company called Swap Mobility. Basically, they do on-demand bus service. So they are enterprise company. They work with bus operators and help to mobilize workers to the factory. So in fact, today they are in 7 countries. Is a startup team that started about 2.5 years ago in Singapore. So in the US, it's like VR transportation. They are kind of a little brother of VR. Of course, they are very small. So they are now in 7 countries. And then the latest is actually already in Japan. So we have a go to Japan strategy because I think in Asia, there are not many stock exchanges who could see liquidity of most of this startup company. And we believe that is Singapore headquarter company want to be successful. First, they have to penetrate markets in Southeast Asia. And for the larger revenue, they really have to go to Japan. And Japan has a mother sport, which actually will be attractive for some of the startup companies from Southeast Asia. So we have since recruited 2 Japanese VCs to co-invest with us in our deal for Swap Mobility. So this is smart city, and also because of the digital transformation, that's a trend that's not only happening globally, it's even more important in Southeast Asia. And now with the COVID situation, it actually accelerated the adoption of digital transformation for many of the emerging countries, from Singapore all the way to Indonesia, Malaysia, and Vietnam as well. So I think these are really quite relevant. And I think another area will be in manage efficiency on smart metering. So we have a company, they started in Singapore, a company called Anico. They do smart metering. They were listed in the Hong Kong board, the second board. And they are also sharing their experience in other Southeast Asian countries as well.
Interesting. Wow, there's even that Japan connection with Southeast Asia. How about Donald? You are directly backed by Ping An, which is one of the largest, if not the world's largest financial conglomerate. So you mentioned about fintech and health tech. Why did the Voyager Fund choose to focus on these 2 sectors?
Thanks, Rebekah. These are 2 sectors. I think particularly in venture, you face this moment of truth where you kind of have to look at yourself in the mirror and say, what am I doing here? And everyone in venture has some story about why it is that they're investing and what they're investing in. And sometimes the story is, I'm just a really smart guy. Sometimes the story is, I started a company in a given sector. For us, we try to invest in businesses where we believe that an affiliation with Ping An is going to be meaningfully additive to that company. It doesn't have to be right away. It can be over the lifetime of the investment. But we look at that. We look at the affiliation with Ping An as our own source of alpha. And when you start with that lens, you begin to say, well, where are the areas where an affiliation with Ping An is likely to be most helpful to a prospective portfolio company? And the answer is very often something to do with fintech or health tech. The 3 ways we work with our portfolio companies. Firstly, we will sometimes be a big anchor user or consumer of some product or service. So you can imagine that a B2B fintech solution that works well in in New York might have some value for Ping An in China. Secondly, what we will try to do is we'll try to give companies that are at a certain point of product development and commercial traction, but are located outside of China, access to distribution resources within China that they wouldn't otherwise have. One very basic example of that is that if you are a SaaS solution somewhere in the West, in all likelihood, you're hosted on an Azure, a GCP, and AWS. Those are not particularly robust cloud hosting solutions within China. We have a business called Ping An Cloud. So what we can do is we can work with the company to stand you up on Ping An Cloud, and all of a sudden you have a viable means of distributing your solution, whatever it is, within China. And finally, you know very well, Rebekah, that Ping An has been a leader and innovator in a variety of different parts of financial services and healthcare within China. We moved to the cloud over 10 years ago, and we have today a very robust microservices architecture that applies AI in very interesting fashion in all sorts of different ways, from outbound voice chatbots to agent training to AI claim recognition. So we have a lot of these capabilities that are latent. Because of the way these capabilities have been developed within Ping An, it's now possible for us to create a Docker image of an SDK that we've built for our own use in-house to stand it up almost anywhere in the world, and thereby to give a company that maybe is trying to do something analogous to what it is that we've done in China the means to grow much faster than it could if it had to do everything on its own. So helping companies to grow faster by giving them access to some of our own technology is another big part of what we do. So those are and so when you think about where that's going to make the most sense, the answer is usually fintech or health tech within Southeast Asia, because I know we're supposed to be talking about Southeast Asia. We don't see a lot of enterprise B2B SaaS solutions, but what we do see is a lot of really interesting emerging ecosystem plays. And what we learned from our experience in China is that these ecosystems, as they develop, think of Alibaba, they oftentimes give rise to ancillary opportunities in financial services in particular. So think of the way Ant Financial grew out of Ali, for instance. And what we'd like to do is we'd like to find ways to partner with businesses, ecosystem businesses in Southeast Asia to make sure that we are positioning those companies well to deliver the right kind of financial services to their customers. That was one of the reasons we partnered not so long ago with Grab in Southeast Asia. And the idea was that, with the Grab ecosystem and our own know-how in particular in respect of healthcare, we thought we'd be able to do interesting things together. So I guess that's kind of how we think about where we want to focus and how we think about Southeast Asia.
Okay, interesting, Donald. What about Wallace? Donald talked about, quite a bit about fintech and health tech. And given that you do so many transactions, are you seeing that same interest in fintech and health tech, or are there other areas such as consumer tech that, or consumer that it's, of interest? Yeah.
Yeah, actually, we want to look at this market in two dimensions. One is called demand. The other is the digitalization. Actually, demand is always there, right? Like a demand for, consumption of goods, consumption of services, and consumption of content, something like that. So I think demand is strong here, and everyone is looking at a market with huge demand for like one kind of service, like goods or like education, online content, something like that. So this is for the consumer part. The demand is always in the consumer part, and everyone is looking at this area. And I think a lot of like growth stage funds or PEs are looking at this area more, because a lot of matured company are coming up from these areas. But for digitalization, I think it's a long way to go. And due to this pandemic, COVID-19, and from earlier this year, I think a lot of countries and a lot of firms has realized that the digitalization for a firm or even for different businesses is crucial for all of them. Everything's going online. So I think a lot of like information technology firms or enterprise service firms, SaaS model popping up. But mostly, I think VCs are looking at this area more because it would take a longer time for this kind of company to grow up. There's an interesting number, like for the B2C area, for the e-commerce, for education, consumer, and transportation. I think for this year, the total transaction for VC and PE deals are like over 170, somewhere around that. But for the enterprise service, it's more like over 250 deals happening. But for the check size, for the total amount, is almost 6 times. Like for the B2C area, for the e-commerce consumer part, it's like 12 billion in total money raised, right? But for the enterprise service area, it's like approximately like 2 billion. So it's 6 times. So that's why different kind of firm, different kind of investors are looking at different areas, and as the areas mature, I think a lot of late stage funds are trying to focus on some of the areas, and that makes a lot of sense because everything is dragged by the consumer part, right? Everyone is trying to buy goods online. Then there's the online platform. Then there's the upgrade on the logistic companies. Then there's the payment system, fintech, anti-fraud, something happening underwater. So that's what I've observed, and maybe some numbers that we can share with you. Yeah.
No, thank you. I think so far we talk a lot about the different countries, the different sectors, all that growth. But perhaps maybe to just add a little bit of spice to this panelist, what about some of the risk considerations or challenges, right? Especially given the COVID year, right? So I think COVID has been a reset for a lot of sectors, a lot of groups, a lot of businesses, a lot of countries. I mean, Singapore included. So I want to just get the panelists' view on, how COVID has perhaps changed, perhaps some of your own thinking, where you see some of the challenges, perhaps even opportunities from moving forward from this year. So Boon, how do you feel about COVID? What it has done or changed for you and your firm in Southeast Asia?
Yeah, I think as a VC fund investment, we always have to look into forward investment. That means we try to guess what industry is relevant. So it's hard for us to even predict such thing as COVID. I mean, it took everybody by surprise. And because several years already, we kind of set our focus on these broad 3 categories of first city, fintech, and synthetic biology. And actually at that time, many people tell us that your industry is so disconnected with each other. I mean, of course, fintech and smart city, it can be connected, right? But the synthetic biology is totally disconnected. And at that time, we actually started investing in 2014 in synthetic biology. It's also by chance, because at that time, Swiss Bioscience was just to invest because it's taking a long time. So they figure out that they don't want to go after VC. VC has a time limit. They wanted to help the world, save the world kind of thing. And Chris basically using a semiconductor equipment to actually doing the printing of the oligos. And I came from the semiconductor industry, so I understood half what they're doing. And they're already trying to do, the existing market is quite big. They're trying to automate that whole system. So that's a very simple concept. So what we did not know is that, Chris, in fact, during this COVID period, they are already listed in 2018. It was an early IPO. They are listed. And during this year, their stock price went from $22 to over $100, which everybody is trying to search for the vaccine, right? So they are all, there's a really huge demand. So in a way, I think by thinking in front, before what other people are thinking, I think that actually has done well for us in a very special sector. But that requires a lot of deep tech. So most of our US and European companies tends to be about much more deep tech. Since that sector is on CRISPR technology, and that's a very different sector, so it has done well. Our other companies are Unity. I mean, that is our claim to fame. We were the investor in Series B in 2011, and of course, at that time, not many VCs in Asia has invested in a game company. I must say that the two Singapore successful game companies are not actually invested by VC. I mean, they're all invested by actually angels. I mean, it's only later on the PE fund come in. So if you look at early identification, so we were kind of early because we tend to think a little bit out of the box. So of course, Unity, last year was only 6 billion, right? This year they went for IPO. Now I think the market is like 35 billion, who knows? During this period, most of the people are staying at home, and they are not only just for the game platform, they are being used for 3 vertical market sectors: industrial, AEC market, in the animation industry or so. They are trying to disrupt the whole industry, and also in the automotive industry. So so we kind of count ourselves lucky, but it's just that we don't do kind of mainstream like what other people do. We just kind of long-term investment. We manage family office money, and also we're trying to help family businesses as well. So maybe our investor actually give us a market intelligence. I cannot say that this is all thought about by ourselves. We always believe in partnership with different kind of people. Market intelligence is everywhere. We're just trying to see what are the things that is more important. We tend to be not going after the general thinking. We focus on entrepreneurs who really take their investment seriously. We don't like big money, year in, year out, coming out with the money. We want the entrepreneur to think about how they actually eventually can make money and when can they make money. That is very important, because at the end of the day, I think burning cash is always easy. If you look at most of the articles, they will just say, how much money they have raised, but they never tell us how much revenue they have made and how much losses they had. So that is a big concern, and I think the COVID situation is making a lot of investors wake up and say that when the music stops, right, when the money doesn't come in, can the entrepreneur sustain that business model? I think that is a very important takeaway for all of us.
Thank you, Subun. I think you raised such a important point with the COVID reset, right? As a lot of people use that. We have 5 minutes remaining, so I really want to still give Donald the chance to share about the future opportunities given this COVID reset before going back to Wallace. So Donald, over to you.
Thank you. You're right. Rebekah, if we had this panel exactly a year ago, I think we would have all done a terrible, terrible job of predicting what 2020 turned out to be like. So you're right. It is not a year that has unfolded the way we thought it was going to. And certainly we've seen some of that in some of our portfolio companies. I'll give you one example. We always talk about the things that go right. We sometimes we're a little shy when talking about the things that went wrong. One business that we've invested in is India's analog to our own auto home business. It's a business called Cardeco, run by an exceptionally talented entrepreneur named Amit Jain. And Amit and the rest of his team doing an excellent job of executing all through 2019, you get into the first quarter or two of 2020, and guess what? Nobody is buying cars anywhere in the world, certainly not in India, which has a nationwide lockdown. So, of course, that presented challenges to that team. And, Amit has built a collection of businesses that are under the Cardeco umbrella in Southeast Asia. They suffered from the same kind of demand side issues that we've seen all around the world. So that required Cardeco to reposition some of its operations. Business has since then rebounded extremely strongly, and they feel very well positioned going into 2021. But I think to me that kind of disruption caused by COVID is the sort of thing that many companies around the world have experienced over the course of this year. What's the just unalloyed, unadulterated great news about 2020? I think it's the fact that a lot of the things that you'll hear from Wallace and from Boon as well, that we've all kind of been talking about as long-term things that are going to happen in financial services and in healthcare. The digitalization that Wallace was talking about, greater focus on different kinds of next generation healthcare that Boon was talking about. These were all things that were interesting to talk about a year ago, but I don't think there was the same sense of institutional urgency around adoption that we now have. And I think we now have it courtesy of all of the dislocation of COVID. So, there's a lot of opportunity, I think, in fintech and health tech in particular because of that. It's stuff that I think we all could have seen coming down the road, but I think it's coming at us a lot faster, courtesy of COVID, courtesy of all of the disruption of 2020.
Yeah, definitely a lot of disruptions. And thank you for being so candid to share about some of the challenges. Or what about Wallace? What have you seen in some of your transactions or portfolio? And again, we got reminded by the organizer that we only have 2 minutes left. So
Okay.
over to you.
I'll try to make it quick. Actually, what we see is that the investment is slowing down in all the markets due to the physical inconvenience for the investors, right? A lot of investors, they can't do some due diligence work on site, and it's hard to try to talk to the founders face to face, and so that's why it's hard for them to make the right choice, to make the decision to invest to write the big checks, right? So that's why we see a huge drop in different sectors of investment. The number of investments, it's almost half the deal year to date, compared to last year, right? And this is really a hard year for all the startups and the investors. So this is one thing. Everything is slowing down, and I think for startups, it's you should see this as a common it's a common thing for you to raise money from only a few selective investors, right? Because the large pool was not there. A lot of global investors who does not have team on the ground could not write checks, right? And a lot of investors are focusing more on the economics of the companies, like the unit economics, the user acquisition costs. The companies burning a lot of money are not that attractive anymore. So this is the other thing. And a lot of investors are trying to what we call is hedge their risks in different areas. So that's why a lot of investors who are evaluating the startups or the companies, they are trying to reach out to the founders who has the so-called global mindset, not only doing the business in one market, but also manage to expand to different areas to hedge some of the risks. So that's what we observed, from this pandemic, and I think a lot of new things are going on around, and maybe for the in the long term, a lot of strategic investors are trying to not only invest but also buy some assets in this area and try to expand their influence and in this particular area.
No, thank
Yeah.
you so much, Wallace. I think you made a good point, right? I think there's a lot of global interest in Southeast Asia, and at the same time, a lot of Southeast Asia companies want to keep going global as well, right? Whether it's
Right.
back in China, or if further out as the US, and and Subun has gave a couple of good examples. So no, I like to ask Dew Street, are there any questions from the audience? I don't know if we have time for that as well, but if not, any comments from Dew Street? Okay, yeah. So if not, then I would just want to again thank all the panelists here for being with me, being with Dew Street, to share your experiences, your as Donald said, maybe not to the extent of forecast, but some opportunities moving forward. I think given COVID, no one dares to forecast anything anymore because we know the sessions are all recorded. All right. So I think on this positive note, just want to wish everyone well, to stay healthy given this COVID challenge, and we look forward to a better 2021.
Thank you, Rebekah.
Thank you,
Thank you,
Rebekah. Thank
Subodh.
you, everyone.
Thank you,
Yeah.
everyone. Thank
Bye.
you, Dew Street. Yep, over back to Dew Street. Thank you.